Hello and thanks for checking out ChartGuys.com. We're proud to be one of the most successful technical analysis communities online, teaching you the skills to become a more confident, effective, and informed trader. Join our community of hundreds of analysts worldwide working together to learn the charts, generate profit, and achieve financial independence. For access to daily live chart analysis and market coverage, a thriving chat community, along with dozens of hours of exclusive educational materials. We look forward to seeing you. Let's check out some charts. Hey everyone, going to start this video off with a bit of a fireside chat with some wet wood burning in the background, but it's better than nothing. So I'm going to talk a bit bigger pictures, psychology of the space, and I'm going to put this in front of both the Canadian and the USMJ video because it is relevant to both. So first things first, we'll talk bigger picture, what's going on, why are we so weak? Certainly one of the reasons that we're so weak, there's multiple reasons. One of the short-term reasons why we're so weak is this big vaping scare that's going on right now. And the market is pricing in that states are going to start banning, or they already have, but that further states will continue to ban the e-cigs, and that's going to cut into revenue of these companies. So in Massachusetts, we already saw a ban. Now, I believe it is Washington's governor that's coming out and saying that he hopes that the state is going to ban things. And hopefully at this point, it's just a temporary ban, because the only thing a ban would do is push everybody to the black market, which would be really dumb. But ideally just putting regulations into place and maybe some more strict regulations, which would be fine. And then the companies can adhere to those regulations. And it would honestly probably be a good thing in the end, because if I'm sitting here and I've got a source for black market THC vapes, and I know there's a risk that I could die or I could be physically impaired because I don't know what's in those, or I could go down the street and pay more but know for certain that it's been tested and that there's nothing that's going to harm me in there as far as vitamin E oil or whatever other pesticides, whatever, I'm going to pay the extra money to not have to think about that concern. So if we can get to a point where we have the regulations in place, that will be beneficial for, in my opinion, driving more people away from the black market going to the regulated market. So that's what's going on right now. Anticipating further states are going to dump. Also, the fact that we didn't get much upside reaction to the passing of the SAFE Act in the House, which is going to lead to further selling. As soon as you see a lack of reaction, anybody that was in hoping for a reaction says, uh-oh, I need to bail, and that's going to drive the price down further. So I know a lot of people are hurting, and it's the kind of thing where, you know, I come online and I see a big red day, and even though I might not financially be down a bunch that day, it feels like I am, because I know how many people are in red positions right now from all the comments and the interactions and the messages and all that. So step number one is don't get too down on yourself if you are in a position where you are holding some bags, because we talk about the herd. And when I talk about the herd, I'm talking about everybody, the big group of people. And the herd is the kind of people that hold bags. And that's because psychologically and emotionally, that's what happens in markets. We have big, hype, euphoric markets, and the psychological impact it has on people is to either be greedy and keep holding, not have a stop loss, not have an exit game plan, have a thesis that we're going to go up eventually and I'm just going to keep holding. Whatever the reason is, people end up holding bags. So we honestly, to be successful as traders or successful as investors long-term over decades, we literally have to rewire our brains and our psychology as to what has been molded either through nature or society or both. So it's normal to be a bag holder, and we obviously have to learn from our mistakes. So I've said this many times, but it's the kind of thing where if you're following a mentor, they can say it 100 times, you still have to learn for yourself. And that's something that I have learned as an educator. People have to learn for themselves that stop losses are essential and bag holding is not a way to go. And it's the kind of thing where once you learn once, if you can learn from that mistake and vow to yourself that you will never repeat it and then be disciplined to never repeat it, you can be successful. And I've said many times also that I would be in much worse shape right now if I did not go through this early on in my career. So I went through this in my penny stock days within my first 2-3 years of trading, where I had a penny stock that I was following and I was doing due diligence on it and I was reading the financials and this was the next best thing. And I ended up with a $7,000 position that went to $42,000 when I was 21, 22 years old, and everything was great. And then it all came back. And I gave all of that profit back. And I said, wow, I just learned a lot. I learned about convertible debt. I learned about dilution. I'm never going to do that again. And I have not done that again. So the only reason that I am in a position is, or that I'm in a better position, is experience. And I've said many times that I would absolutely shudder to think at what I would have given back from the cryptocurrency 2017 run if I did not know what was coming in the sense of a major pullback. So this kind of pullback has happened in markets all the time. Even in just the past 2 years, we can pick a half dozen markets where it's happened in. Right now, CGC has pulled back on the weekly time frame 55, 60%. We look at Bitcoin, Bitcoin's a relevant example just because of a major hype euphoric market. We pulled back 84%. It got to the point where, I like to underpromise and overdeliver, and I like to stay conservative, but we were down in the 3,000, 4,000 range, and it was very easy to say that when we bottom, Bitcoin will make a very easy 100% move. And in the end, it turned out going up 400% in a few months after that psychological, or I should say after the emotional cycle shifted from despair. It was a very quick shift. So a lot of people, I can't tell you how many people were holding bags from 15,000, from 12,000, from 9,000. And eventually there was some relief. But the bottom line is a ton of lessons were learned, and those people are going to apply those lessons to never be holding bags for prolonged periods and for 30, 50% drops ever again. It happened in natural gas. Natural gas shot up in 2018 at the end of the year, and we pulled back massively on the weekly time frame from there, 50, 60% pullback. The 3D printing stocks, this was absolutely brutal. We pulled back 95% in DDD over 2 years. But the bottom line is this happens time and time again. So if we learn from the mistake and we don't repeat that mistake, there's other hype markets that are going to come. I know that it is very likely that sometime in the next 2 to 5 years, I'm going to trade a hype market that I am not anticipating in the slightest right now. And I'm not going to give back profits, and I'm not going to hold on to bags when that hype bubble pops. So again, the important takeaway is don't beat up on yourself and think you're terrible at this, because it's very normal to be a bag holder. You have to train yourself and go through the experience and learn from the mistake to not be that bag holder. So it gets to the point where what's the difference between an experienced trader and investor and an inexperienced trader and investor? What's going on psychologically? So if we just look at CGC as an example on the weekly time frame, so we can both have the same thesis. And let's start off just by saying that I have been extremely wrong in the marijuana space multiple times in 2019. I remember saying, going back and saying, I'm watching for the potential of the summer lull to be priced in a bit early. Obviously, that did not happen. And the only reason that I'm not sitting here holding a 40% down position is because I know when to cut my losses, and I know when to admit I'm wrong and bail on the trade and say this is not going the way that I thought it would. So remember Cron, I was looking for Cron to set a monthly high or low and trying to position myself for that when we were trading in the $13 range. And I made an entry into a position. I forget the exact dates of when that entry was, but I believe it was here, and there it is. So I entered just under $14, or right around $14. And I said, all right, I'm looking for a monthly high or low. I'm going to try and position myself to benefit from this. We saw a beautiful daily trend change. We saw a nice follow through move. At that point, my position was up a solid 10, 15%. I put a stop loss in, and I said, okay, well, if we get back to my break even point, I'm going to be wrong. The odds that we're going to see a monthly high or low, if we see this much of a bounce and then give it all back, I'll be wrong. So I want to stop out. So I ended up exiting that position in a small amount of green because I exited when the daily high or low lost. So I knew to bail because it was not following through as I was anticipating that it would. And that had prevented me, if let's say an inexperienced trader would have the same thesis. I'm looking for a monthly high or low. I'm looking for the MJ space to turn around. And they would keep holding. They wouldn't cut their loss because they have their thesis that it's going to go up. And even if it keeps dropping, they keep telling themselves it'll go up eventually. And the pain just gets worse and worse. So whereas an experienced trader will cut that loss or cut that trade at break even, the inexperienced trader at this point is now in a position that is down 30 to 40%. So another example, when I was trading the cryptocurrency space in 2018, I was only playing bullish and playing oversold bounces for a number of reasons, which I won't get into, but mostly exchanges being limited. But I traded from, this was what the chart looked like, and I only traded bullish, and I ended up with a pretty solid year in cryptocurrency profits. And there were many times where I was playing oversold bounces and I scaled in too early. The dump got more extreme than I was anticipating. And I would take a loss in the red just to reload cheaper. So what I mean by that is if we're dumping on the 4-hour time frame and I'm getting in for a 4-hour oversold bounce and I get in too early, and so my average scale in position is too high, the 4-hour oversold bounce gets going, and we know we're just looking for a 4-hour lower high, but that 4-hour lower high does not get back to my break-even point. I will still scale out into that 4-hour lower high at a loss, knowing that if we confirm a 4-hour bear flag, I will just reload cheaper. If I'm in a position that's down 10% and I see a bear flag, I mean, how many bear flags has IAN given us on the daily time frame the past few days or past few weeks? The answer is a lot. So if I see a bear flag and I'm in a red position, I can still sell and just reload. If I sell IAN, I see this bounce and say, wow, that's a really bad bounce. My position right now is down 10%. I want to keep a long-term position, but I know we're likely to drop to lower lows. So I exit at 316 and then I can reload the leg down. And even if I just take off 10%, that lowers my cost basis 10% and it keeps me in the game. So it's just the difference between an experienced trader and how they're going to do it and an inexperienced trader. And the biggest takeaway is stop losses always and having an exit plan. What am I going to do if it keeps dropping? Because again, as I've said many times, we can always go lower. There can always be another leg down. It can always get uglier than you think it will. So right now, unfortunately, there's a lot of people stuck, and I know a lot of people watching this video right now, they're stuck in a position where they're saying, I'm down 30%, I'm down 40%, and I know it's going to bounce. Do I cut my loss right now? I know it's just going to turn around eventually. I'm very confident in the space as a whole. And then they decide, nope, I'm sticking with my thesis. I'm just going to hold. And then next thing you know, a week later, it's 10% lower. And they have the same exact conversation in their head. Do I sell now that I'm 40% down or 50% down when I know it's going to bounce? And they get to a point where it's just frozen and inability to act because they're down to a point where they are scared that if they sell, the bounce is going to get going. So should you sell now? I'm not going to answer that question, and I never could. It all depends on where you entered. It depends on your personal financial situation. How long can you let the trade ride out? The takeaway is, number one, don't get down on yourself and don't get depressed. Number two, learn from your mistake and never let this happen again. Number three, respect stop losses on any investing or trading position that you ever take in your life. Number four, always have a game plan of where you will exit if something happens, if it's going against you, if it ends up playing out in a way that you did not anticipate. And all of those things, yes, maybe it's a missed opportunity now. Maybe when the MJ space turns things around, you're only just going to be looking to get back to break even. And that may be the case. You may miss that opportunity, but the takeaway is there will be another opportunity. Even if it's not in the MJ space, it'll be something, we'll be investing in flying cars in 8 years. Who knows? But the bottom line takeaway, I think I just went through them all. So, inexperienced trader versus experienced trader. I have been losing some money in the MJ space, trying to establish positions, taking small losses when the bounces don't play out or we don't get trend changes. And I've been offsetting that with some day trading. But on the whole, I'm probably this summer, down a bit on those positions. And actually, I'll probably go back after this video and just determine where I'm at as a whole in only the MJ sector. But the bottom line is, because I've kept those losses small, when the sector turns around, and I'm not saying if the sector turns around, I'm saying when this sector turns around, I have a lot of cash. A lot of my portfolio is cash just waiting to strike on that. And I know that the small losses that I have incurred attempting to position myself, I will very easily make back when the momentum does shift. So if I were holding bags, I'm only looking to get back to break even. I have no further capital to deploy, and I'm probably going to miss out on this run and just hope to get back to break even. So that's the lesson that we learned from this. And again, my lesson was 8 years ago, 7 years ago. Your lesson may be now, but there's a whole long game to go. And maybe your life's not going to change in the next year because of MJ stocks, but there will be opportunity in the future that you can apply the lesson that you have learned in this sector. You will apply it and make better decisions. I never in a million years would have anticipated that the lesson I learned in a penny stock would greatly benefit me in preserving the profit that I made in the cryptocurrency space 8 years later. So we don't know what the future is going to hold, but what we do know is what the past can teach us to apply to the future. All right, getting into the Canadian MJ name, CGC was a daily bear flag shape before today's trading. Today's trading only furthers that narrative and possibility. So we're looking down at 23.10 and 22.76 as the only support levels nearby. And essentially we're in a setup where a daily bear flag can possibly confirm a weekly bear flag as well. So we'll be watching after 22.76. We'll be looking at 22 psychological. Next weekly level will be down at 20.99 is what will stand out to me. And we'll be keeping an eye on the weekly RSI getting back to oversold, the daily RSI closing in on oversold. Our new daily lower high is 25.41 resistance. The bears still have full control short term. Cron is looking to test its low of 893. If that level breaks, next support we're looking at is down at 851. Weekly RSI getting oversold. Daily RSI is more oversold than CGC. I will be interested in Cron if things get extreme, but even just looking at the 4-hour chart, not extreme enough for me to be interested. Even if we break that 893 level on Monday, I would need to see weekly, daily, 4-hour, and hourly RSI all oversold if I'm going to have any interest in establishing a game plan on playing a Cron bounce. APHA, multiple daily, actually just one daily inside bar, broke bearish today without a lot of follow through, just by a penny, but we're looking down at 534 support and then 502 after it. ACB, we're looking down at the low of 451 as support, potential little bear flag. After 451, there is a lack of support, and we're looking down at 405. And remember, the monthly equilibrium on ACB is breaking bearish, and if we break that 451 level, we will consider it that we're now in a monthly downtrend. And at this point, as I said, when it happened, this could be a double bottom because we only broke by 7 pennies. But now that this daily time frame is close to confirming a bear flag, if we break 451, we will say very clearly we are in a monthly downtrend now. And again, there's not many MJ names that you can say that about, so it would stand out. TLRY is back towards testing its low. Recent low was 25.87. We broke that. 25.15 is the only support level nearby. VFF is all bears. And the next support level is 8.89. That's in play, and actually we already broke it. So VFF, after 8.89, the next level is down at 8 psychological. Monthly time frame, you could consider this a lower high and lower low here as well. And RSI is oversold on the daily, not oversold on the weekly. I would be interested if we drop down early next week into the mid $8 range. I'd be interested in an oversold bounce. TGOD is back towards its low. 220 is the only support. 220 and 219 the all-time low. New resistance at 245. And we are close to seeing a new all-time low in TGOD, potentially joining MedMen on the U.S. side of things, which is constantly hitting all-time lows. Hexo, equilibrium on the daily is still playing out. We have our low, high of the bull move, higher low, lower high, higher low, and looks like our lower high was hit today. So the most important support is 398, and it does look like 434 is likely our daily lower high. Need to see a bit more pullback to be confident in that, but we're going to be watching for a break of this range probably Tuesday or Wednesday, but certainly possible any day from here on out next week. Worth watching Hexo. If we get a bull break and the sector still stays weak, we're not going to be expecting a whole lot of follow through, so just be aware that even if we go counter what the rest of the sector is doing, that there will still be some correlation probably hindering Hexo. That being said, if Hexo were to break bull and we see some oversold bounces in the sector and a couple green days in a row, that would only help the Hexo bulls. So a nice pattern to be watching. OGI, tons of bear volume recently, continues to drop to lower lows. The next OGI support is down at 347 and then 297 after that. Bears in complete control of OGI, anything under 435. Just a daily lower high. VGW is falling off a cliff. So the weekly time frame has to form a higher low compared to 280. We're looking at 3 psychological and 280 as supports, and a huge bearish engulfing candlestick this week. And we'll be watching for a potential play off of that support at 280. 4-hour RSI is oversold. So if we were to drop down under $3 early next week, keep an eye out for a play off of 280. LABS, equilibrium on the daily, broke bear today. 426 is the next support level. It's a double bottom at this point. After 426 is 403. And KHRN is down at its low. Anything under 149 is just a daily lower high. Support is 121 and then 114. So very quick analysis because everybody's doing the same thing. Only a couple support levels. Some names don't have nearby support levels. Clear lower high resistances, and we're at a point in the sector where we can say, even if we bounce, it's just daily lower highs. And that was the case heading into the first day of trading after the pass of the SAFE Act. We knew that even if the bulls had a big green day or multiple big green days in a row, just daily lower highs. So that is our anti-FOMO right now. If we miss a bounce, if we're looking for a bounce and we miss it, and we see 2-3 green days in a row, just a daily lower high, bulls can look to play the higher low after that bounce, looking for that consolidation if they so choose. And that would still be an aggressive play. But the bottom line is there can be patience in this sector right now while we wait to see what the headlines are going to be for further states banning vaping, while we wait to see daily trend changes. And until that happens, extra cautious of capital. And you better believe that there's a bunch of bears waiting to short those daily lower highs, whether it's through options and puts or whether it's through shorting actual common shares. So until shorts, again, put yourself in position of it being a short. If I'm short CGC right now on this daily time frame, I have absolutely nothing to worry about. I would consider closing a position if 25.41 were to break. So I know if 25.41 does not break, I'm not doing anything. I'm holding my shorts open. So bears in complete control. We'll certainly keep an eye on things. Hope you have a good rest of your weekend. I will do my best to get our regular slew of videos out over the next couple days, and we will see you on Monday.